Right. So we have a related question when you talk about raising cash. So it's about selling, right? So Elmer wants to know what are your exit strategy? Like when do you know when to take profit? Like for example, you mentioned the stock from $1 to $5. Should you take it now or should you wait for it longer, right? How do you tell?
Actually, very hard to teach you. Sometimes when we sold a share, when we think it's already too high, the guy just keep on going up and going up. So our strategy is always that. If you are so lucky to have that stock, we will sell on the way up because there's no way you can sell at the highest point. Let me share with you some of the rubber glove share last year. We have a staff quite new, and then we took at all the rubber glove shares, and all the top four, So, but the top three is always not so cheap, and then the top four is very cheap. So every now and then, she will come and tell me that, hey, I think this share is very cheap, So I want to institutionalize it. Okay, you think it's cheap, we buy some. Then we buy some. Every time we buy, the guy keep on going down. I think we continue to buy a little bit here and there, and the highest price we bought is around below 180. That's Supermax. Supermax went to $24. But we sold some at 21 plus. But we didn't sell that many at such a high price now because on the way up we sold. But we make a lot of money out of that. So who is going to teach you? Where is it going to? So when we sell 21.50 around there, my other staff say it go to $30. It never go there. And in fact, not only never go there, nowadays it come down more than 50% from the peak. It's not easy to teach you how to sell also. Because it depends on how other people going to do, Your vaccine come out, how people react to rubber glove. And earlier, everybody want rubber glove. They pay them such a high price. You want to go and buy rubber glove, there's nobody who can supply you. It's totally nobody who can produce enough to sell you. And the average selling price go up 3 times, 4 times, And their profit just shoot up, Yeah. Then when the profit shoot up, they pay the price higher and higher. Not only they pay you on your earning growth, they also pay you higher and higher PE. But when the market goes the other way around, the profit goes up, but there will be lower PE. So in other words, your share can go down, and which is what's happening now, So investment is an art to that extent, So when I see the share go up more than 10 times, I'm quite happy already. Yeah. So you can say I'm lucky, you can say you're lucky.
Okay. So it's not just the financial numbers, right? Not just the P alone. It's the overall sensing of how the market is reacting to the stock. And
that's a good one. That's correct. You need to know. So that's why I write this so-called word of wisdom every year. This the 12 year I've written. So this is one time that I said you a good investor must actually know what other investor is going to do. That's very important, but it's difficult. But you have to try.
Okay.
So some people have zero rubber glove now. Some people still have a lot.
Okay. Bringing the attention to US, Gopi is asking, are the FANG stocks, the Facebook, Apple, Amazon, Netflix, Google, are they still attractive long-term investment in this period?
Okay, we specialize in ASEAN. We also go into Asia and Japan. Last year, one of our Asia and Japan did 31% US dollars. But last year, I must say, China, Taiwan, Korea are done very well. So we also benefited. Yeah, but US, we follow, but we are not a specialist. We monitor them in terms of financial data instead of their PE and all these things. But I must say all these star is very good for us. They perform well, they go up, they also influence our tech stock here. So our tech stock here also goes up. But if you ask me, they are excellent company. They can continue to grow. The key is that the kind of PE that you're going to pay. Yeah, you look at Tesla, Tesla at one time was growing, but they were behind the rubber glove, So now the rubber glove go down. Tesla still continue to go up. But it's very hard to say it can go the other way around also. So when they are too high, it's whether you want to keep. But it's hard to say because let's say if you buy Microsoft 20, 30 years ago, today you are still very well off. Let's say you buy Apple 10 years ago, now you're still doing very well. But it can correct now. But if you study carefully, if you don't sell any of this stock, and you take a look at the price from February the 12th when Dow Jones crashed, and then on March the 23rd at the lowest point, wow, all these shares also tanked, Now it recover again, So you may want to consider, what you want to do with them. You make a lot of money, Yeah. You are taking higher risk, and no one can tell you when is the highest point, Yeah. But one thing I would advise you, you can never sell at the highest point because highest point is only 1 or 2%. Yeah. But when you sell high enough, that's good enough. That's my advice to you.
Okay. So another question, I guess, is more related to US again. From Tommy, he's asking, how do we select good fundamental companies still making losses? So because I think the context of it is that there are a lot of new young tech companies in US, they are listing, they have losses, which, in the past, maybe we don't see that often, right? Companies usually make money, then they go listing. But now, with the technological revolution, a lot of the younger companies are hitting the capital markets a lot earlier than the predecessors. So if, let's say, somebody is really looking at this kind of companies, right, what kind of fundamentals are we talking about? What can we look at to determine who are the good ones and the bad ones?
Okay. I think it depends on the risk you want to take. Just like Bitcoin now, Bitcoins, a lot of people, some people came and say, you must have Bitcoin, But sometimes you were wondering, when I put in my money, my most important question is that how do I get out? So I need to get out. And when I get out, can I use my cash, So, but some people who bought it so cheap that they don't care, they just hold on and on and on and on there. And if valuation satisfy you, wow, you're rich, man, But some people, they are not willing to take that kind of risk because they don't know how to exit, So it's the level of risk you want to take now. There's so many ways of making money, So it depends on what kind of risk you want to take. Now, a lot of these shares, I must say, a lot of these shares, they don't have profit yet, and they pay a very high price. And you would also understand, some of them, they hold on and then they continue to go up, and then when the market crash, they also come down. So you need to also, as an investor, if you want to play safe, you want to take acceptable risk, use the word, take acceptable risk above average return. You want to take acceptable risk, you have to make up your mind, you have to disqualify. And then you still have to make money. But the saddest part is that you only make the return of a fixed deposit, and you don't know how to invest. You even make lower than the fixed deposit. You know how sad it is then. Yeah. So and the worst thing is that at the highest point, you get in because people tell you that, I make so much, what makes you think it cannot continue? That's where, you need to know, talk to people who know better than you, try to also see from the conservative side.